As I was doing my morning walk, I happened to walk by a Mercedes G-Wagon that reminded me to share with you a tax strategy that could potentially save you thousands of dollars when you are thinking about selling your business vehicle. So 2 weeks ago, I had a realtor client who came to me for tax consultation. And he was rather upset because he found out that he owed the IRS about $30,000 in taxes for the sale of his G-Wagon that he used for his business. The story goes, 3 years ago, his real estate business was doing really well. So he splurged on $100,000 G-Wagon, and he intended to write it off against his income, which happened to be about $500,000. Since he used the car exclusively for his business, and the G-Wagon weighed more than 6,000 pounds, he was able to take advantage of Section 179 of Internal Revenue Code, which is a code that allows taxpayers to deduct the entire cost of business property like G-Wagon in that year. As a result, his taxable income dropped to $400,000 from $500,000, and being in 40+% overall tax bracket, he effectively paid only $60,000 for the G-Wagon after the tax benefit. So last year, his business did even better. So he decided to upgrade his G-Wagon. So he sold it for $75,000 and he bought a Lambo truck. In his mind, since he sold his G-Wagon for less than what he paid for, he bought it for $100,000, sold it for $75,000, he should have no gain, therefore no tax bill. So when he found out that he owed the IRS $30,000, he was pretty pissed off. So I had to sit down to talk about 3 tax concepts with him. So 1, the basis, 2, the gain calculation, and 3, depreciation recapture. So 1, the basis. So essentially, basis the money that you spend to purchase a property. In his case, he spent $100,000 to buy his G-Wagon, so that was his cost basis. Since he utilized the Section 179 to write off the entire $100,000 against his $500,000 income, his basis went from $100,000 to 0. The second concept, the gain calculation. When you sell a property, the gain is calculated by the money that you receive from the sale minus the basis. So in his case, his G-Wagon was sold for $75,000 and his basis in G-Wagon was 0. Therefore, his gain from the sale was $75,000. So when I shared this information with him, he asked, hey, did I have $75,000 in capital gains? Because he knew that capital gains tax was better than paying an ordinary rate, as he was at one of the highest tax brackets. Unfortunately, I had to say no. Due to the concept of depreciation recapture, $75,000 of the gain would be ordinary rate. Then he asked about depreciation recapture. What the heck is that? So I had to explain to him that when you sell a business vehicle like G-Wagon that you have depreciated, when you sell the vehicle, you must return the amount that you depreciated back to the IRS. There's no free lunch. So this means that he would have an income equal to the amount that he depreciated, in his case, $100,000. But thankfully, the tax codes allow him to include the lesser of the amount that he depreciated or the gain from the sale, which was $75,000 versus $100,000. So at the end, he only had to include $75,000 as depreciation recapture. I had to remind him that, well, you benefited from depreciating $100,000 on your income, but you only have to pay back $75,000 in recapture. So at the end of the day, you get to buy and enjoy and depreciate the G-Wagon, and he still got $25,000 of tax benefit. So when he heard this, he was a little bit relieved. So my point is, when you sell a business property like G-Wagon, you have to think about depreciation when you sell the property. And depreciation recapture will be taxed at your ordinary rate. So higher your rate, the more taxes that you're gonna pay. So there's a lesson that I wanna share with you and a tax strategy that you can use to minimize the depreciation recapture. So instead of selling the vehicle, business vehicle, keep it as a business vehicle for the total of 5 years. So 5 years of ownership. And then instead of selling, convert it to personal use. And then use it for commute or to go shopping, whatever. And when there's no sale, there's not going to be any tax bill. So you're not going to pay any depreciation recapture. So had this realtor reach out to me before selling his G-Wagon, I would have told him, hey, keep the wagon for 2 more years, so total of 5, and then use it as your personal vehicle. It's a nice car. And use it for several more years, and you can potentially gift it to your parents, and you would have no depreciation recapture tax. This could have saved them thousands of dollars in tax. So hope you learned something, and until next time.